needs to fast-track public procurement. Mr. Rawani, the Vice President also 2 days ago, the Legislative Economic Summit spoke about the need to shorten the procurement cycle. This handshake between the government and the private sector, what are the concerns of the private sector? Because this government, any government alone cannot fund its own budget, cannot only roll people out of poverty, so you need the private sector.
No, but the Vice President was very clear also at the OPTS conference, which you are aware, about the fact that, yes, we are dealing with the host communities in the oil sector. We are dealing with reorganization of NNPC and other things with the PIB. But most important, what are the fiscal incentives that you're going to give to the oil sector? Because you've got to nurture the oil sector before you diversify away from it, because that's where the bread and butter is. And having dealt with that, having dealt with the alternative cash crop plants, having dealt with the incentives for refineries on the downstream and midstream, having dealt with, without coming out with the fiscal incentives so that Mobil, Shell, Chevron, and everybody can now begin to invest. They are the guys with the big checks, and they will write those checks. They can write $20, $40 billion, 3-4 times your budget in 1 year, and you begin to feel the impact almost immediately. It's about impact investment and tying it to projects. So we take the LNG expansion, we take the rail, with General Electric. We take the bridges, the roads, the ports, and all. So we have to go for them big time. The Mambila Plateau alone is about $6-7 billion. That is almost, God knows what, almost 1/3 of your budget. That is one project alone. So if you, like I said from the beginning, you need the vision, which I think we have, so to speak. We need the courage, which I think we lack. And then more than anything else, we need the integrity, which I think we are working on. So when you have those three ingredients, then you begin to have how it will change the private sector perception to what they have to do when they now begin to write the big checks and begin to put their money where their mouth is. In addition, you have the diaspora, which is our biggest thing, where we swap talent for cash on one hand. We have the exports, which we are expanding our export, the range of exports from solid minerals and all of this. But these are work in progress. Like Moody's said, the long-term outlook looks stable, but the short-term looks vulnerable. How do we deal with the short term? We've got to bring some of those factor prices back to equilibrium. The most important one, having a unified exchange rate and allowing ourselves to set the target of currency compatibility within a very short frame. If you do this, then you begin to feel the impact. The Nigerian people will feel the impact. Without impact, they are going to be in despair, and that's what you need to avoid.
Well, folks need to make money. Michael, they need to make money. Folks need to be, whether they are putting in savings account, or it's going to be a deposit account, or they are investing in insurance, or they are buying mutual funds, or they are doing, they're putting money in pensions. So folks will need to look at the budget, look at how government is spending money, and let me take this to the market street and see how much of this will I be able to claw back in to pay school fees and pay mortgage and live a better life and take a holiday and what have you. So what is in this budget, this new, if we add 2017 to it, if we try to, because this looks like we're going to be straddling each other all over again. So what is in this from an investment perspective?
I think, to be fair, the budget is in line with what people would have been expecting. As the president said, it's a reflationary budget. They've been reflating since 2016, really. So there's not many new surprises in terms of expenditure. The revenue breakdown perhaps is a bit surprising, given the level of increase in non-oil revenue. But I think from an investor's perspective, what they'll be looking at is, okay, when is this budget going to be passed, and how quickly are we going to see spending actually occur or investments actually occur? Because what we've seen in the last couple of years is there's been a divergence between what is projected and what is spent, especially on the capital expenditure front. In terms of the fixed income side, there's what they'll be looking at is where government borrowing is going to come from. It's looking like government borrowing might be moderating from 2017 on the domestic front, especially. There's also the discussion of the green bond. So there's probably more interesting news in that area, but I think generally until we start seeing traction in terms of when this budget will be passed, do we hit that January 1st target, there may be a bit of calm looking at it.
Mr. Rawani, if foreign investors and local investors are talking to you and they say, look, we want to invest, what is in this budget for me to increase my wealth what would you be saying?
There are lots of opportunities here. There's the civil works and construction. There are projects which the federal government is calling on for PPPs so that people can come in and join hands with the federal government to do this. But the critical variable for this budget and for the Nigerian economy in 2018 is the level of interest rates. With interest rates and treasury bill rates at 18, effectively 23%, you are going to have a constriction of economic activity. We need to allow the general level of interest rates to come down by about 200 to 300 basis points, which means that the risk-free rate of borrowing in Nigeria should come to about almost 18 or 19%, which is quite higher than the rate of inflation. And the policy rate can then begin to follow gradually. And then access to credit, availability of credit, and the retail lending by the banks and to the SME sector will drive that process. When that value chain is fully engaged, you'll begin to see the impact all over. At this point in time, all the indicators are positive, they are green, but they are green in little baby steps. We now want to make them giant steps. And the big issue is that there has to be fiscal and monetary coordination. Under the previous administration, in spite of all of the largesse and all of the leakages, you had a coordination, you had a minister coordinating the economy, you had fiscal and monetary coordination between Minister Ngozi and Sanusi Lamido. This time we are beginning to see some convergence of ideas and principles. We need to see that work, and we must see interest rates come down. If interest rates do not come down, agriculture, civil works, real estate, stock market, even the bond market will suffer anemic outcomes.
Mr. Rwani, hold on a second. We're going to give you 2 minutes, and Michael Famoroti 2 minutes when we come back after the break to let's speak specifically to the stock markets after the break. Don't go anywhere, Mr. Rwani from Financial Derivatives and Michael Famoroti from Vertiva Capital Management, live here in the studios at our international headquarters in Lagos.